The hidden small cap, I regret not buying more. I need to tell you about a stock that gives me sleepless nights. Not because I lost money in the stock, but because I did not buy enough of it. Now, the stock name is, and currently I am sitting on 73% gains in the stock. I should be celebrating, right? But here's the thing, every time I look at this position, I feel two emotions. One is happy, and the other is deeply, very deeply frustrated. Because I watched this stock grow from 180 rupees all the way to 520 rupees and make huge money for investors like me. And I kept telling myself the same lie investors tell themselves. I will buy more when it corrects. But it never did. I kept on waiting and the stock went on climbing up and up until now. After months of showing bullish upward movement, this hidden gem has shown some correction in the last few months. So should I buy more of this hidden gem now? And if yes, then at what price? So let me break this down for you the way I wish someone had explained it to me when I was new to the stock market. So in this video, I am going to answer three critical questions. First, the opportunity. Why exactly BLS can grow exponentially from here? Second, the risk. What are the real dangers of investing in this stock that no one is talking about? And third, the levels. Where exactly I am planning to build positions and what is the upside potential in this stock. So the stock name is BLS International, and first let us talk about what BLS actually does. So they process visa applications, they help you get your passport, they run government service centers. It is the kind of business that makes you yawn just hearing about it. But here is a twist. This boring business is actually a 13,000 crore rupee empire, and it is built on something far more valuable than you think, and it has the potential to make huge returns for its investors. Think about it like this. Imagine that you're the government of Spain. You have an embassy in India, but you do not want to deal with the chaos of processing thousands of visa applications every single day. It is messy, it is administrative, it is not your core job. So, what do? You outsource it. You hire BLS to do it for you. They collect all of the documents, verify all of the forms, take the biometric data, and manage the entire process. Now, the embassy still makes the final decision, but BLS handles the entire system. So, they are like the Zomato of government services. They do not cook the food, but they own the delivery. And this is where it gets interesting. Now, this business model has created something so incredibly rare in investing. It is called an unbreakable moat. So, let me explain you why any new aggressive startup cannot easily enter in this business just because of one word: trust. We are talking about sensitive data over here: financial records, passports, fingerprints, biometric scans. So the governments do not just give this responsibility to a newbie, they give it to someone with proven decade long track records. And BLS has been doing it for 20 years straight, has processed over 360 million applications, and is a trusted partner to 46 governments across 70 countries. So once a government truly trusts you, they almost never switch because the cost and the security risk of changing the entire system is massive. So BLS has stable and long-term contracts and a predictable revenue. And this is called a classic sticky business model. And this is the stickiness which led the stock to keep on climbing up and give 130% returns in the last 3 years while I kept on waiting for a dip. So this stock has huge potential. But let us first look at the risk and then we will see where we can buy this hidden gem. And now let us talk about the risk because no stock is perfect and BLS has some real challenges. So the first risk is competition. Now VFS Global, founded in 2001, still controls 50% of the market share in visa outsourcing market, while BLS International is at number 2 with 17% market share. So tomorrow, if VFS Global decides to go aggressive on the pricing and expansion, then this could hurt BLS's growth. Now, the second risk is government dependency. 75% of BLS revenue comes from government contracts. And if a major contract is lost or not renewed, then it hits hard. And these kind of contracts come up for renewal through competitive bidding. So there is no guarantee that BLS will always win. Third, the e-visa threat. More and more countries are moving towards digital e-visa systems where you just apply online. And if this trend starts catching up, then the demand for physical visa processing centers will significantly drop down. And BLS is building its digital capabilities to counter this. But still, it is a risk. It is a minor one, but it is a risk. Fourth, geopolitical tensions. Remember India-Canada diplomatic war? So this kind of tension can disrupt BLS operation in affected countries overnight. Now they operate in 70 countries, so diversification helps. But geopolitics is unpredictable. And the final risk is the promoter dilution. The promoter stake has gone down from 74% to 70% in the recent years. Now they have been diluting for fund acquisition. But if this continues aggressively, then it could signal that the promoters are cashing out rather than doubling down. And now let us talk about the numbers, because at the end of the day, a good story does not mean anything if the financials do not back it up. So now here's what BLS has delivered over the last 5 years. And trust me, these numbers are wild. So the revenue growth from 478 crores in FY 2021 to 2193 crores in FY 2025. So that is a 5x jump in just 5 years. And the revenue CAGR is 46%. So that is not normal for a mature business. Now next is the profit growth, and this is where it gets crazy. Now the net profit went from 50 crores in FY 2021 to 540 crores in FY 2025. So that is a 10x increase. And the profit CAGR is 82%. So the company is not just growing, it is scaling profitably. Now here is the best part. While the revenue grew 4.6x, the operating profit grew 15.8x. Why? Because earlier BLS used to run on a franchisee business model. Think of it like Domino's Pizza franchisee. BLS used to give its rights to local partners to operate the visa centers, and in return, they would take a cut from their revenue. This was a low risk but also a low margin business model, as the franchisee kept most of the profit. But starting around FY 2021, BLS started converting these franchisee centers into company-owned self-managed centers. Now, instead of sharing the profit with a franchisee, BLS keeps the entire pie. So they manage all of the operations, they own the customer relationships, and they pocket all of the margin. And the result, the operating profit margins exploded from 9% in FY 2021 to 30% in FY 2025. So same business, same customers, but now way more profit per transaction. Next is low debt and cash rich. Even after spending over 1,000 crore rupees on acquisitions, BLS maintains a net cash position of 1,126 crores as of June 30, 2025. With minimal debt, this company has a fortress balance sheet. Now here's the thing most of the people miss. This is not just growth. This is scalable, profitable, cash generating growth. And the company is not burning cash to grow. They are printing money while growing. And the best part, the digital services segment, which is growing at 64% per year, is still only 25% of their business. So as that scales up, their profit margins could expand even further. So finally, where am I looking to buy the stock? Now see, the stock is currently trading near 330 rupees, and here is where most of the people will jump in. But I am not doing that. Yes, 328 rupees is a solid support zone, and the stock has bounced from this level 3 times in the past. But there is a problem. The stock BLS has been stuck in a consolidation range between 328 rupees and 393 rupees for the last 2 years. And I don't want to get trapped in a sideways stock and lock my capital. See, I have two clear strategies. So here is strategy number one. I am waiting for the stock to break above 393 rupees and sustain above that level. And if that happens, the consolidation is over and the next leg of the rally begins. And that is when I will build my positions aggressively. Yes, I will be paying a higher price, but I will reduce my risk significantly. Strategy number two. Now, if the market crashes or if BLS corrects heavily, I will be watching 264 rupees. Now, that is a very strong support level, and at that price, I will be getting the stock at a cheap PE ratio, and that is where I will bulk buy without any hesitation. But here is the real lesson. BLS International taught me something painful yet valuable. Never rush and buy a stock in FOMO. Now, if I had seen the stock rallying and bought it near 500 just because it was rallying, today I would be sitting on a loss. But I waited, I stayed disciplined. And yes, every stock will give you an opportunity. So that is my plan. I am building positions slowly and at the right levels. And this time, I am not making the same mistake twice. But what about you? Are you holding BLS or are you waiting for a better price? Let me know in the comment section. And as always, this was Sanika from RANGAONE Finance, and I will see you very soon in the next one. Till then, bye bye.